Everybody's bogged down. Everybody's worried about their turn times. We're feeling it like crazy. We've got loan officers coming to us saying, I want to leave my company because I just can't get anything done. Look, you need faster turn times. Just go to REMN. REMN Wholesale. 3-day turn times, premium pricing. They'll fly that thing right through the system. Just get it over to those guys. Click the banner you see on your screen right down below. Talk to a REMN account executive and get these things flying through the system. And if you feel like you gotta change your company, well, there's a banner down below for that too, but only if you really think it's them and not you.
Long time no see.
Long time no see.
Long time no see.
Long time no see.
I just spent the past, 8-9 days traveling with families around the southwestern states. Now get this, I actually stood on a corner in Winslow, Arizona. Does that make sense to anybody? Such a fine place to be. Anyways, on with the show. So get this, starting December 14th, Fannie Mae is going to require self-employed borrowers to provide 3 months bank statements along with their P&L. Now, this is in the new stated income world that we live in right now. Up to this point, it was okay to only have 2 months bank statements. Now, your company could have required 3, but according to Fannie, you just needed 2 until this December 14th, which is really soon.
So this might look like a little change on the surface. I mean, what's the big issue? 2 months, 3 months? The self-employed borrower should have bank statements that accurately reflect what their P&L shows. Here's the problem.
Also went to the Grand Canyon.
Squirrel.
Okay, so here's the problem. Look at the world that we live in right now. I saw this firsthand. Out here in California, we just found out that we're shutting down most of the state again. Other states are looking at post-Thanksgiving lockdowns as well that mirror what we're doing in California. Now, this is coming off of a recent lockdown we had only a few short months ago. So for small business owners, constantly opening and shutting your businesses is going to show wild swings in the form of your deposits on those bank statements.
And the thing is, for those self-employed borrowers that are looking to get these type of loans are the very people who are getting shut down, the small business owner. So weighing a longer history of bank statements in our volatile world has a bigger chance of inaccurately reflecting the earning income of that borrower and that small business.
Also went to Zion in Utah.
Squirrel.
Okay, so here's the point. For lenders working alt-doc deals, the new stated income for self-employed folks make double darn sure that your income calculations for qualifying purposes is lock solid and written up by your underwriters before making any type of promises.
Because I tell you, screwing up someone's qualification right before Christmas, which is less than 2 weeks from now, will not only mess up their Christmas, but it'll mess up yours.
Saw the biggest meteor crater in the country too. Now, speaking of another pending shutdown and businesses suffering, isn't it just kind of darn interesting how the housing market has just remained red hot? I mean, the last $3 trillion handout helped out a bunch, but that's been burnt through. Now with the election all but decided, the House of Representatives has decided to stop their deadlock on the second round of bailouts, which should be passed relatively soon. But this is only $1 trillion. Frank, think of what I just said. This one's only $1 trillion. It's crazy.
This is something else.
So, is housing going to get hit in 2021? And by the way, one last point here before Frank answers that. We just found out it's affirmative. This has been the richest, hottest mortgage market in the history of the mortgage market. We did it.
Because given massive year-over-year gains in home prices, the Federal Housing Administration is increasing its 2021 loan limit in most of the U.S. to $356,362, an increase of nearly $25,000 over 2020's loan limit of $31,760.
I mean, this is crazy. What a crazy world we're living in here in 2020. Property values are going through the roof. FHA just blows the roof off their loan limits, and yet $1 trillion additional bailout is needed to keep us up. Another round of lockdowns is coming, and get this, there are now calls for postponing mortgage payments once again. You do see the crazy contradictions here, don't you?
Now, some decidedly good news from all of this. Turns out, with home prices going nuts, sellers are moving away from iBuying platforms. Yay. Why? Why in the heck would I sell my home for 95% of its value? That is the number, by the way, when I can get way more than asking price in most markets right now.
Because according to Realtor Magazine, buyer purchasing volume has been significantly lower in recent months than before COVID-19, the report notes. iBuyer purchases, get this, are 82% lower in the third quarter of this year compared to last year.
So loan officers, this is a good time to reach out to agents. They are once again truly controlling these transactions.
And I gotta tell you, the best way to do it is with Listing Booster. We're absolutely killing it with our new strategies, our new technology, and our new service. You should look into it. All you have to do is click the banner down below. Now, listen, if you're seeing us for the first time, we bring this to you free of charge. So subscribe. Oh, also, hit the little Facebook button or share this with your peers in the real estate lending community. But I gotta tell you, the best way to get the National Real Estate Post every day free, just do this.
Download the National Real Estate Post mobile app today. Available on Apple Store and Google Play. Just search National Real Estate Post.